Welcome to Java. Thank you kindly for joining me. It's September 29th, 2024. It is Sunday. I'd like to take a look at this week. I had a few things that I expect could have a large effect on it. We've got quite a few things going on right now as we speak that I would like to cover. So my apologies for this being a bit late, but it's kind of developing as I'm doing this. So with this, I'd like to go into what is going on. We'll start off with the risk factors and what happened last week, though. So on Friday, there was a bit of a pullback, and this kind of pulled also down the risk just a slight bit. Now, the 10-year yield, relative strength of the dollar both weakened a bit, and that allowed quite a bit to move into stocks that were quite volatile on Friday. So we've got retail investors still pouring into the market. It's very deeply still into the green, even though the fear greed meter is slightly lower. Now with this going forward, we've got a continued trend, even though there was a temporary jump in these. The 10-year yield and relative strength of the dollar will continue to weaken going forward with this ongoing easing. So aside from the rate cuts, they will continue to get weaker. So we've got cryptocurrencies are on the rise, still Bitcoin above 65,000 at 65,717 currently, and it will hit resistance, bit of resistance at 68,000. We'll see what it does there if it breaks out or if it does begin to retrace. Now, I'd like to speak a little bit about last week because we had a major currency war unfold. Now, we have Japan's stocks set to fall on rate hike fears after Ishiba's win. So what happened was they got a new prime minister, and they are basically looking at the yen carry trade. We've got a bit more of that has to come out. In fact, it's a large bit. And with this, they're talking about their currency strengthening. So as a currency gets stronger, the stocks will fall. Now, this is the inverse of what we're seeing in the United States. As our currency, the dollar, is getting weaker, more money flowing into stocks. So basically, we've got an everything rally going on. I'll talk about that in a moment. Now, with this, we've also got a serious rally on the opposite spectrum of Chinese stocks possible. And this is because they're doing the same thing. They're easing, quantitative easing, massive backstop by the Chinese government going into Chinese stocks, basically, and bolstering their economy. So they're looking to resolve their structural issues and then also to increase their employment by all of this easing that they're doing. But this all lends to massive inflation in the end. So along with this, we've got German unemployment up more than they expected. And I don't know how this is possible when you shut down your factories and you kind of push everything out, increase the cost for energy, the unemployment will naturally go up. So I think they're being disingenuous with this, but we're going to watch more increases in unemployment across the West. That includes the United States as well as Europe. So with this moving forward with trading, because we've got a lot of retailers coming into the market still. Now, right now, it's not a huge deal, but it's growing exponentially. And this is humans versus artificial intelligence in the stock market. This is talking about the worst trade ever made, is how they're putting it forward. But basically, the algorithms already have traded for quite some time, but adding artificial intelligence for more of the analysis could basically make this exponential in the percentage of losses that retail traders will take, because the fear, greed is the main factors in trading. And if you can remove that, you can make very logical decisions in trading, increase your rate of wins. But artificial intelligence does not suffer from fear like humans do. And this could also exacerbate the amounts, and humans just will not be able to get out in time. So, watching this moving forward, urging caution to people that are looking at trading long term, it's kind of working itself out. So with this, we've got the sentiment right now. Inflation will push stocks higher in the long run. So watch currency and competition specifically at this moment are Japan and China with their currency wars, and then also the physical war with Iran and the port strike, which I'll speak about more in just a moment. With the calendar, we've got quite a bit more coming out this week, much more than last week. But the large things to be watching is consumer confidence on the 1st, factory orders, which will kind of give us an eye into real economy, and US non-farm payrolls coming out on Friday, October 4th. Now, this is the main indicator they will use for labor market health or jobs, basically, and the cuts that are coming forward. So on watch, we've got Wall Street's risk binge expanding to even unloved assets after the global policy easing. So this is just the scale of how much they are pouring easy money into the market. This is basically buy everything, even if you don't like it, buy anything, get rid of your dollars. The dollars are trash, are different ways to say the same thing. Basically, it's risk on, buy everything because everything will be going up except for the US dollar. So with this, again, trade wars are pushing the currencies in inflation, and this is going to become just massive until it breaks. So we've got cargo carriers fear the port strike will paralyze half of US trade. It is across the United States, and we've got port workers all the way from Maine to Texas set to strike on Tuesday. And they say if this is allowed to go on, expect shortages and higher prices. Now, with this, I would like to say don't expect that they will allow this to go on. However, as they are being forced to increase the wages for these workers, this will lead to higher prices across the board because the companies are not going to eat this loss. They're going to pass it on. As they pass on costs, that brings prices up. So we're looking straight in the face of higher inflation, higher prices again. It just has not manifested yet, but it will. A couple of other things I would like to cover. Censorship is increasing at also an alarming rate. So what I'm getting on this platform when I try to show you something, this is how it comes out if it is recognized. Now, I've kind of had to do a couple of other methods to enable getting these pictures on here basically so you can see the titles. I also am limited in what I can say about these because I would like you to be able to see these now. Uh, RT is a paper from the East, basically, the same that we are having a proxy issue with through Ukraine. So if you can figure that out, basically, their magazine's not allowed to post. We've got the leader. Basically, this could start a chain of destructions. This basically coming straight from them between the two parties in the Middle East, that this is causing main issues. It is ongoing, taking out more direct threats coming out from here and escalating at a rapid pace. So I'm sure you will hear about this, but we'll keep our eyes on this and I'll try to basically update you. Now, all of the money that is pouring into the Middle East and into these wars to cause this escalation, to exacerbate the issues that are going on over there, instead of paying for what is going on domestically. We've got major flooding issues. This is Asheville, North Carolina, and also Black Mountain, and they're basically cut off. The roads were wiped out, and Interstate 40 is completely unusable. Backup of traffic, they can't get to their families, and this is basically what it looks like. Now, this is another town, this is down in Florida, at least 52 casualties so far and millions without power. So this is quite devastating. And I would just like to put this in here, not just for what is going forward, but also for prayers for all of the people affected by this, because we've got to stick together. So hopefully they were prepared, able to get out in time, and just please, anything you can do to help domestically, because we're going to depend on each other, not the government. So with this moving forward, I wish you all basically a good week ahead, rest of your weekend. And if you're affected by this, my prayers go out to you. So I'll see you again in the morning. And until then, stay free.